Millions of Americans facing a spike in healthcare premiums as Obamacare subsidies are set to expire tomorrow. The Congress ended its 2025 session with no agreement on a possible extension. Now states are stepping in to shield citizens from soaring healthcare costs. One Wall Street Journal op-ed calling Obamacare, quote, a money pit for taxpayers, adding a new study shows extending these subsidies would be reckless. I spoke with Ohio Congressman Michael Ruley on this program yesterday. Here's what he told me about a potential congressional compromise on that.
We cannot let them win this narrative time and time again. The Republicans do the hard work. The opposition party plays with narrative. I'm okay with the 2 or 3 year subsidy, so we're able to do the hard work and actually fix it at the ground level. We're a divided conference. We're going to find out where that sweet spot. If I'm a betting man, I would say the sweet spot's going to be a 2 year subsidies. I think most of our conference is fine with the 1 year. 3 year, a lot of people are saying a bridge too far. I'm okay with that discussion on a 3 year extension of subsidies. I think 2 years where we're going to land.
2 years. Let's bring in Montana Congressman Troy Downing. Congressman, you're on the House Financial Services Committee. I want to get your reaction to those comments from Congressman Ruley. You know, it is one thing to say that these subsidies, we can't afford them. We've got to reframe and basically redo the system. On the other hand, there's a political risk for that in a midterm year.
Yeah, and Cheryl, first of all, you know, I'm a former insurance commissioner, so I used to actually regulate, you know, this for the state of Montana. So I'm pretty familiar with how all this works, and I think a lot of the narrative has completely gone off track. Now, first of all, what everybody's talking about with these Obamacare subsidies, these were the enhanced premium tax credits that were created to deal with the Democrats passed this during COVID. So basically, this was a temporary solution during the COVID pandemic, you know, 4 or 5 years ago. And the Democrats wrote it to expire. Now, first of all, one thing I just want to point out is that it's for a very small part of the population. Everybody sees their health premiums rise all over the place for a lot of reasons that have nothing to do with these tax credits. And when you talk about the political part of this, let's just look at the mechanics on how this works. When an insurance company, a health insurance company, they file their rates, you know, months in advance of the open enrollment period. Those get filed with their states, they get approved by their state regulators, then they get filed with CMS, the Center for Medicare and Medicaid Services. And then comes the open enrollment period in the fall, you know, mid-November to mid-December for the next year's policy. So that has already happened. That's already baked in for this tiny percentage of the individual market. It has nothing to do with, you know, small group, large group, self-pay, none of the other stuff. It's just for this small section. So now let's look what happens if, you know, obviously these credits are going to expire. I think it's today or the next day. What happens if they expire is the rates go up. What happens if we extend them is the rates go up. But look at the scenario where some of my colleagues are talking about extending them for 1 or 2 or 3 years. What does that mechanically look like? So that creates this chaos in the system. So if they extend these premiums, then we're going to have the payers, the insurance companies will refile a new rate. So let's say that's February or March. So those get approved. They get filed with CMS. We have another open enrollment period, March or April. And then people are going to be confused because they're going to think it affects them when it only affects this tiny percentage of the individual market. And so confusion in the marketplace. And then do you make it ex post facto? Does it go back to January 1st or does it go from there on? So there's one scenario of complete chaos in the market, or the other scenario is that you extend it for 1 or 2 or 3 years. So that has no effect on the 2026 policy year. And that comes in when it gets filed next fall. You have an open enrollment period after the election. So it has nothing to do with the elections for the 2027 policy year, in which case you'll probably see still a raise for a lot of mechanical reasons, but, you know, maybe not as big because of those tax credits just in the individual market. But you're still going to see an increase in rates because the system is broken. The system, it was designed to fail. It's failing now. It's collapsing under its own weight. Nothing has caused health insurance and health care to rise more than the Obamacare, more than the Affordable Care Act. And we need to actually get back down to the drivers of this cost. And just one thing I want to point out is there's two things here.
That's a big ask, though, Congressman. I'm sorry, but that is a big ask. I mean, look, I know that there's a lot of talk about reforming Obamacare and changing whether it's tort reform or whether it's making the marketplaces more competitive. Fair enough. But you've got a short window in January. And you've got the Democrats that are threatening to shut down the government again over this. And you've got people like Jasmine Crockett saying she's predicting a government shutdown. So there is political risk in all of this for both sides, but really for the Republicans. And so I understand the money pit angle that the Journal is talking about. One thing that you do say, and I do want to bring this up, you say this is a rapidly failing system, but I don't think that you can fix that system on a legislative calendar when you've got just a few days when you're both in session in January. Is that a fair assessment?
I think that's a fair assessment. I think that the problems that we have are systemic and huge. I mean, we've created so much distance between a patient and a provider, and there's so many people in the middle, and there's so many things that are driving the costs up, which is creating this adverse selection, which is making it so that the risk is being concentrated, so the losses are higher, so the rates are going up, and that's like this, death spiral we're in. But the political part that you're talking about, yes, I agree. It's a big ask in a short amount of time. What I'm hoping is we saw in the last shutdown, there were no winners there. And the Republican conference stuck together and said, we're not going to negotiate with terrorists, because we had a very clean CR to deal with keeping the government open and going through the appropriations process. We didn't put any, political landmines. No, there was nothing in there to cause the Democrats to go against. They created this red herring that we're now still carrying, that they're still dealing with. But what my hope is over the next month, because obviously we have until the end of January until the current CR expires. And my hope is that we see that nobody won that last CR. No, the American people suffered. There were a lot of problems. I'm hoping that calmer heads prevail and we can deal with the normal appropriations process. But in terms of dealing with the affordability of Obamacare, I mean, I agree with you. That is a complicated, difficult thing. But the answer is not in these Obamacare subsidies. This is a complete smokescreen for a tiny percentage of the market that's going to have no major effect on 95% of the folks that are insured right now through their employer, through small group, through large group, through other means.
So, Congressman, I think it's fair to make the assessment here that you're going to be a no on any extension of the subsidies.
I think we're throwing good money out. I think we're throwing away good money. I think that it is not going to get people where they think it's going to get them. This is a tiny percentage of the market. I think we can't. The Affordable Care Act, basically, if you write a blank check, of course you can make it work. But nobody's willing to just write a blank check, no matter how high it goes, for a broken system where you're dealing with costs. And that's what we're talking about right now. We're talking about writing a blank check so that we can put a smoke screen out there, because, let's just get back to the basics. I mean, this was a landmark piece of legislation for the Democrats, probably one of the biggest things they've done in the last 3 decades. They want to protect it with these smoke screens because nobody wants to admit that the emperor is wearing no clothes, and he's standing out there completely naked, and this is just a smokescreen to hide that, rather than going to the fundamental issues of what's broken about the system.
Well, Congressman, we didn't even get to talk about the small business landscape out in the nation. We ran out of time, but love to have you back as soon as you can do it. Congressman Troy Downing, thank you so much for being here.
Well,
appreciate it. All right.